Is confidence actually increasing right now?
Well, confidence increased off of a dramatic drop in our last survey, but I would say it's still in the caution zone. You know, the reading was 49. Anything below a 50 on this index is negative. So I'd say confidence bounced back, but I would say it's still very much a caution zone for CEOs right now.
Roger, what exactly has been the driver, or what has been the, I guess, biggest influence on that confidence number, the confidence read that we are seeing?
Well, look, the topic that you've been talking about has been really important, trade and tariffs. In our last survey, trade and tariffs was the #1 risk. It's now #3, so it's still certainly up there. I'd also say that we're seeing some changes in the labor market. There's a noticeable tick up in those that are saying they're having some real problems in certain areas, though overall I would say no problems hiring. So those are two areas that I think are weighing on CEOs' minds right now. It's what you've been talking about for a period of time.
All right, so it appears as though, from what you're saying, the trade worries are still elevated, but they are less so than they have been over the last quarter. How about the recession expectations? They were pretty high, as I recall, just about 6 months ago. Are they still up there right now?
No, they've moved back very much into normal territory, and so that's a good sign. I'd also say the other thing that seems interesting to me is this survey was done right after the so-called Big Beautiful Bill, and it didn't move expectations for capital expenditures. In fact, you know, the vast majority of CEOs are expecting to keep capital expenditures pretty much where they were, which is another sign that while they're not pessimistic, nor are they really, you know, putting their foot on the gas pedal. And so I think there are a number of things here that suggest even keel has returned, but with antenna up for certainly uncertainty and therefore a bit of caution coming from the CEOs.
And just one quick point before we let you go, Roger. How about jobs? Are CEOs still looking to hire, or are they looking to pull back?
Well, it's a very interesting question. This is the first time that we've seen those expecting a net reduction in the labor force to outstrip those who are expecting to increase. Now, overall, I think things are neutral, but your point, very important. The tick up in those expecting to reduce over those expecting to increase. Again, a little bit of a yellow flag vis-a-vis how things are going in the labor market. And the last point I'd make is some inflationary pressure. We've been talking about tariffs and trade. Most CEOs are working to figure out ways to offset that through increased productivity. But #3 and #4 said they're going to increase prices. Very few, less than 20%, said they're going to reduce profit margins because of these tariffs and trade issues.